June quarter of 2020. So that was that period right after when that big lockdown was first announced by the government of India. So that's how much the economy contracted at that time. And India's GDP, which was at 7 to 8% about 7-8 years ago, has fallen to its lowest in a decade at minus 3.1% by the fourth quarter of 2019-20. Now, this week, Fitch Ratings cut India's growth forecast to 10% for the current fiscal. Earlier, they had pegged it at about 12.8%. They're saying that India's economic recovery is very slow after the second wave of COVID, and that importantly, rapid vaccination could support a sustainable revival in business and consumer confidence. So it's very important for us now to look at what the road ahead is for the Indian economy, what are the possible solutions out there to help in India's economic recovery. So we're looking at solutions, we're looking at a way out, and we're so happy to have with us some of the most leading voices of Indian industry here tonight in partnership with CII, the Confederation of Indian Industry. Please allow me to welcome Dr. Naushad Forbes, a past president of CII, co-chairman of Forbes Marshall, Mr. C.K. Ranganathan, the chairman of CII South and the chairman of Kavin Care, Mr. B. Santhanam, the former chairman of CII and the CMD of St. Gobain India, also joining us. Unfortunately, Shobna Kamineni, who was also a past president of CII, she had to drop out because of a family emergency. We're sad we don't have her with us, but we are here to take whatever questions we can from our panelists. Do feel free to write in your questions as you see fit. I'd like to begin by asking all of you, and to begin with you, Dr. Naushad Forbes, what do you see as a broad sort of roadmap? What is the broad picture according to you as far as the economy is concerned? You keep reading about V-shaped recoveries, U-shaped recoveries, very many different alphabets get thrown around. But where are we really at the moment?
So, without question, we will see a big bounce back when the growth numbers for Q1 comes out for this year. But that's on the back of last year's minus 24%. So relative to last year's minus 24%, this quarter, the first quarter of this year will show a huge positive number. But to get us back in absolute terms to the same level as last year, we need to actually see a plus 31% number for this Q1. And no one's forecasting that. No one's forecasting that we will be in absolute terms at the same absolute level, let alone showing any growth. So I think we have an issue to address. To me, it's not so much what happens in the course of this year that I worry about. It's what happens going forward. What happens this year, I think we'll see us get back essentially at the end of the year in March 2022 to where we were in absolute terms in March 2020. That'll be a big recovery from the minus 8% growth we had last year. But it's not good enough. It means we've had 2 lost years. We cannot afford 2 lost years as a country. We're too poor for that. And so we need to get back to the old growth line, the old trajectory, and to make up for these 2 years. Now, what are the concerns that we have? To me, the big concern is in employment. Coming into the second wave, before the second wave, CMI estimates that total employment in the country was about 10 million down on where it was. So on a total base of 400 million, it was about 10 million down. Not only was it 10 million down, but there was also about 10 million people who had moved from urban occupations to rural occupations, which is completely contrary to what we need as a country. For people to move back into agriculture is a sign of failure. And the CMI also estimates that in the second wave, about 7 million, about 25 million jobs were lost, out of which 7 million won't come back. So in other words, coming out of the second wave, we have about 17 million fewer jobs in the country than we had going into the lockdowns last year. That's the big long-term issue that we need to address as a country. How do we get back to being an optimistic country, a country where most people, even working in these informal occupations that created a lot of employment, how do we get back to a scenario where most people expect a better life in the years ahead? I have some suggestions on what we can do, but I think I've spoken for long enough, and I'd like to hear my fellow panelists, and then we come back to that in a minute.
Absolutely, and I think the sentiment that you've expressed is shared by many across the board. At the end of the day, it comes down to jobs, 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 and how are we going to create those jobs will be the big question. I'll come back to you in just a couple of minutes on that. Mr. Santhanam, what Fitch has said, about rapid vaccination essentially being the key to India's economic revival. I'm sure you would agree with that ultimately for us to get back to some semblance of normalcy, are hopefully getting to the target that the government has set for vaccinating all adults by the end of this year. I mean, our fingers crossed on that. The vaccination rates are still very slow. How do you look at the way the sort of vaccination is going so far, Mr. Santhanam? Are you still optimistic that we can reach those targets? How do you see it?
I'm not sure whether we'll reach those targets that we will have the vaccination done by December, but I'm optimistic that the demand and the consumption part of the economy would be largely vaccinated. And that's a very loaded statement because even if you really ask Naushad, Ranga, or me, 90% of our employees are already vaccinated at least once. So what I see is a kind of a situation where you would find vaccination being done for a large amount of formal employment and probably semi-formal employment. So therefore, that itself should kind of revive the confidence and other thing. But vaccination is absolutely must. And also, we have to get out of this fear of COVID. I think to a large extent, we didn't have that. And by March, we felt perfectly comfortable. All of us were saying everything is hunky-dory. Our economy was coming back. Our businesses were roaring. We were doing very well. But this April, May really put a huge mental block. And I think today, a large number of our consumption has come down. There is a demand shock that we see. So I believe that vaccination and all related things by which you can remove these sensible lockdowns and other things will start reviving the thing. So therefore, vaccination is the most important thing. But if you really look at both US and EU, today, for instance, the tourism in EU is almost nearly back to normal because you have the vaccine passports and you have people who are freely traveling from one place to the other place, provided they're vaccinated. I think we need to really accelerate this. I believe corporates are ahead of the curve on this. I think a lot of us have done at least the eligible employees, about 80 to 90% of our eligible employees have been vaccinated at least one single dose. So I think it's needless to say this is the single most important thing because it's in the mind. We have to get people to start consuming. And I think vaccination is the first and the foremost thing. If they don't have fear, they will come out, they will spend, they'll go and do the touch-based services. Today, they are the ones which are really lacking. Even today, for instance, you see a K-shaped recovery. You see certain making part of the economy doing reasonably well, but the touch and the serving part of the economy is still far from a level, and we are 60% dependent on that.
As you said, there is certainly a fear of COVID, and having had it myself, and we've all, I think, had families and others ourselves. I don't know if any of you had it. It's been a very scary experience, and I guess because, Mr. Ranganathan, we don't know what variants will come up, and there is so much uncertainty about a third wave, the possibility of future lockdowns. When Mr. Santhanam talked about sensible lockdowns, I wanted to understand what you think that means before I ask Mr. Santhanam that. But how worried are you that future lockdowns, no matter how localized they may be, would impact our economic recovery further? Because it may happen.
Yeah, thanks, Nidhi. I feel that the lockdowns, the third wave is inevitable. Definitely the lockdown is going to be there. It will going to be micro lockdown, micro kind of this thing in terms of localized containment strategies. And that's very, very important. But I think all the state governments across India have learned a bitter lesson in the second wave of locking down much later, not adapting to micro lockdown strategy. En masse lockdown is not the solution. I think going forward, very important thing is that this time, for example, now we are seeing about 43,000. I don't know what is the today's number. Yesterday it was 43,000 across India. If you look at, if it goes to about 65,000, you can see quite a lot of states jumping in and start adapting the micro lockdown strategies. And that's very, very key. So from that angle, I feel if the micro containment strategies, lockdown is implemented, not the entire city, not the entire town, it is only the respective streets or the kind of colonies are locked down, I think it will do so much good for us. Also, parallelly, the vaccination is very, very key. I think if we do maximum vaccination, particularly I would say that vaccination need to be done in the employment sector where the economy ticks in. I think if that is done, and particularly in a closed door areas where people have to assemble for doing work, if vaccination is given priority, I think that will do so much good. Another thing the government need to do is also makeshift hospital, a lot of ICU beds and also oxygen endlessly available so that public is prevented from not getting a bed, not getting oxygen facility. If that is done, I think even if the cases surge, it can be treated just like that. The fear will be much lesser. The problem is when you don't get a bed, the panic skyrockets and everybody goes into a shell. I think that's very important. I visualize a day will come when vaccination is done reasonably well, irrespective of mutations. The human race is far more intelligent. One day we will have a solution. But what will happen is we have to treat the way Singapore is doing now. The corona will be treated like any other flu. I have enough beds.
That's their plan, yes.
Yeah, absolutely. I think that we need to definitely emulate such kind of going forward, such kind of actions.
So let me get back to now looking at a specific roadmap, and let's get back to the issue of jobs. Again, looking, Dr. Forbes, at the CMI data that you also cited. What they have pointed out is that while the unemployment rate has fallen in June to about 9.1% compared to about 11.9% in May, because some economic activity did pick up, the labor participation rate and the employment rates are much lower than pre-COVID levels. And I guess that's what you're citing when you are worried about the issue of job creation. So therefore, I come to the question, what do we do? How do we get these jobs back?
So, governments, in a sense, do not create jobs. The economy creates jobs. So what the government needs to do is to do whatever it takes to get the economy moving along nicely. If the economy moves along nicely and people are confident, the economy will create jobs, as we've done for the last 30 years. So what do we need to do? The most direct thing that the government can do is, I'm not a believer in cuts in GST rates. I do not believe in that as a fix for actually stimulating the economy. I believe in two things that the government can very directly do. The first thing they can do is to pay their bills. If they pay their bills, they owe hundreds of thousands of crores to small companies, large companies, public sector units, state governments. The numbers add up to huge numbers. That puts liquidity into the economy here and now. And it has the additional advantage that while it adds to the deficit today, right, it means that you will add less to the deficit later because you'd have paid those bills later in any case. So paying your bills upfront instead of having this huge legacy of outstandings is a very useful, valuable way to stimulate the economy. The second thing is this long wanted pipeline of infrastructure projects. What people have shown, and most economists find, that the most powerful multiplier effect of government spending is spending on infrastructure. Because if you spend on infrastructure, you're employing lots of people directly in building roads, building bridges, particular projects that are underway. But those projects need to move both at the union government level and at the state government level, which again means that the union government needs to pay its bills to the state government in terms of GST revenues in particular. If we do those two things, I think that's the way to actually stimulate the economy in the short run to medium run. The next thing that I think we need to do is to demonstrate that we are serious about the reforms that have been announced. Never mind new reforms. Worry about the reforms that have already been announced. We have a privatization program that was announced in the budget. Implement it. Let's see something tangible about how public sector units that have been promised to be privatized, 2 banks, 1 insurance company, etc., see them move from where they are currently held to a separate unit within the finance ministry that's concerned only with privatization, where success for them is privatization. Because only if we do that will we achieve this privatization target. Otherwise, this will be the fourth successive year where we announce targets, we have these numbers in the budget, but we don't achieve what we said we would either disinvest or privatize. That would be the second thing that I would do. The third thing that I would do is I would really worry about international trade. We have a big opportunity in international trade, in exports. I worry that
Bangladesh is doing better than us in exports.
it's doing much better. Vietnam's doing much better. Sri Lanka's doing much better. I worry that we don't admit this, but I worry that we've turned our back on exports as a big engine of growth. And we've done that by being much more inward looking and much more protectionist in these last 4 years. And I think a change in that, in our trade strategy, to being more outward looking, to being more open, to reducing tariffs as the best way of ensuring that our exports are competitive, is a very powerful available incentive for us, a very powerful available growth engine for us, which so far we're not only not tapping into, but we're not even talking about it. I think it would be it's an opportunity that exists here and now, because the US market is booming like nothing else. The UK market is also booming. They're buying lots and lots of clothes and garments and so on from Bangladesh and Vietnam and places like that. There's an opportunity for us if we choose to take it.
Okay, so some very good suggestions there coming from you, Dr. Forbes. When we talk about job creation, and we know one of the sectors I think that's been the hardest hit, Mr. Santhanam, has been MSMEs. And in fact, Shubhankar Chakravarti's asked a question here that how do you revive the MSME sector? Would cash transfers possibly help to increase the buying capacity of common people? Is that a way to revive sentiment? If you'd like to take that, Mr. Santhanam.
Yeah, so but I would like to take on a little bit of what Naushad talked about. I'm a bit optimistic on the export front. What we have seen is Indian exports go up and down with the global growth. When you really look at the growth situation in US or in Europe, which are our traditional exporting, we don't export that much to ASEAN countries. There is a massive demand. Today, when you really look at it, if you talk to some of my friends in the textile industry, they are fully booked. Now, what we need to make sure is that at a microeconomic level, a lot of us have to look at exports very, very seriously, even companies. So while the government has to do a lot of things, there is a huge possibility, coupled with the fact that there is clearly a shift from, say, the global supply chain is shifting. This is a great opportunity for both the country as well as the entrepreneurs to shift focus on export. We've seen even at a micro level, for our own group, we've seen a very big increase in exports in the last quarter. Even last year, at the same period, the exports were not so badly off. So exports is a huge opportunity. We are still struggling around at the 35, 40 billion per month. It could be a $50 billion opportunity, adding maybe a 5 or 10 percentage point to the economy over a period of time. Coming back to MSMEs is not an isolated thing. Exports, we know that a very large percentage of the exports come from the MSME sector. So therefore, export focus will help the MSME. The real thing would be that we have several direct transfers which we have to do to make sure that the consumption is taking place, and that companies have to extend their network. And here I'm saying that I, as a company, have a group of MSME ecosystem. If I protect them during this particular period, either through liquidity or through vaccination program, you'll find that slowly you lift this up. So it's not just what the government has to do. I think the government has done some extension of credit and many other things, but it's also equally important on corporates to look after the MSME, which are closely linked to that. The third one, which I really believe, which is somewhere in between MSME and things like that, is construction sector. I think real estate and construction sector are the ones which are driving the revival in Europe and US today. If you see that in the US, the home prices are 25% up compared to 1 year ago. And we are talking about a pandemic. Now, we today are not leveraging the real estate in the construction sector because they are bogged down by several assumptions about this sector. So we need to really look at what is it that we can do about the construction sector and the real estate sector. And we have seen in the short term some amount of incentive, like Maharashtra had given an incentive on the taxes and other things for a short period. You saw a very big jump in the sales. So therefore, I would like us to focus on construction, the corporate ecosystem, and whatever the government is doing, direct transfers and other things. So, and when you do that, you lift up the MSME, and exports is a big opportunity for MSMEs.
Okay.
So those are things that I would like to say.
One of our attendees, Karthik, has a question. Karthik, please go ahead and please tell us who your question is for.
Thank you, ma'am. So Dr. Forbes was referring to the exports thing. So just before the crude oil prices shot up, we had a very brief period where we had a current account surplus, which would basically imply that it is a capital account deficit. So can a developing country like India afford a capital account deficit at this stage when it needs investment and when investment is a key factor of growth?
So, first of all, this is not my area my area. So I will be very brief. I would only say that as a developing economy, we should worry less about current account deficits. Depends on what's driving that deficit. Is the deficit being driven by us, for example, importing a large quantum of capital goods, which we're using as investment in the economy? And then that sounds like a very productive, good reason for that deficit to exist. So I would not worry so much about the current account deficit. I think what you mentioned about the capital account surplus, can we run a capital? We should not be running. I agree with you. We should not be running a capital account surplus. We should be. That says that people in India are more confident of getting a higher return by investing overseas than overseas people are confident of getting a higher return in India, and that doesn't make any sense to me. So I think we should as a country expect to run a capital account deficit for decades, because we should be able to provide higher returns to global capital for decades than capital can get anywhere else.
Mr. Ranganathan, we all agree that, and I think all the recent data points to the fact that there is a huge demand deficiency right now. And, I want to ask you, there are many sectors, across the board when the first lockdown was announced that had to announce salary cuts, for example. I know it happened in the media, it happened in other sectors as well. Many of those sectors have not restored those salaries. Now you're seeing, prices have gone up, inflation is high, fuel prices are skyrocketing. How do you get that sentiment to spend back? How do you think it can be done in these circumstances in particular?
I feel one of the best way to do that is reviving the jobs back. Because if you don't put more money in the hands of the consumers, I don't think they are going to spend. One of the ways of doing it is more jobs to be created. Economy should be back on track by fear should be going away. I can go out as usual, not an issue. The beds will be available. Corona can be treated like any other kind of ailment. I think that is one very, very important thing is asking. I have a point to make on the MSMEs, Nidhi. I just would like to make a point. So on MSMEs front, I think I have one long-term solution and 2-3 short-term this thing. Short-term one, I think government has announced 3 lakh plus crores on 28th June as a package for MSMEs. And also parallelly, I think government has announced traders to be included as part of MSME sector. I think that's a very welcome sign. But having done 25 lakh traders have come into the kind of fold of MSMEs, the package can be enhanced. That is one way to kind of this thing. 3 lakh will be grossly inadequate. And the other one, if you look at that, is raw material prices have skyrocketed. And that is also hurting MSMEs the most. And government contracts and any other kind of this can be revisited, allowed, because a lot of contracts are based on the past pricing. And that could also help. The third one, I would say the international freights. They are 3 to 4 times. as things predicted, it will last till 2022 end. The freights are going to be ruling at the high. Therefore, to be make MSMEs far more competitive, government can subsidize the excess freight and making the export sector far more this thing, particularly from an MSME, and thus creating more employment. Quickly employment can come through is what I would say. And the long-term one, I would say that government is spending phenomenal money, huge money year after year in skill development, skilling the kind of this thing, workers. But I think a good amount of money need to be spent on skilling the MSME entrepreneurs. Because an entrepreneur, if you develop, if you improve their caliber and capability, leadership, I think a 10 to 15 people guy will employ suddenly, if he employs 10 to 15, will employ 100 people. And that's one way to multiply, because here is a proven guy who is already employing somebody. Invest on them and take them to the next level is what I would say. Thanks.
Okay. Dharmesh, you have a question for one of the panelists. Please go ahead. Dharmesh, are you there?
Yeah.
Okay. Until you fix your video and audio, I love this format because it does create all these awkward moments. Let me go to my question. Now, let's talk about manufacturing. I come to the manufacturing because we've heard so much, Dr. Forbes, about Make in India, Atmanirbhar Bharat. And I think the target when Mr. Modi took over as Prime Minister back in 2014 was to make manufacturing 25% of the GDP. I was reading data that said that it's stuck at about 15%, or 7 years later. What's going wrong here as far as manufacturing? And related to that, I also want to ask you whether you're worried that we're going a bit down the protectionist route with the whole Atmanirbhar slogan.
So yes, definitely on the second question, as I was saying earlier. I'll talk about it in a little more detail, but on manufacturing first. It was the goal of the previous government. It's the goal of the current government to raise manufacturing from the 15% or so of GDP that it's been since 1991, by the way, to 25%. But it stayed stubbornly in about the 15% range, right? Question is why? Well, the argument that I make is that as an economy, our manufacturing is more skill and capital intensive than most economies at our level of development or our per capita GDP. Given that we are skill and capital intensive, then the only way for manufacturing to be robust is if we invest a great deal in technology. So we need to invest a lot more in R&D and a lot more in technology. It's okay if you're Bangladesh or even Vietnam to not invest that much in R&D, because the bulk of your manufacturing comes from relatively low technology, simple assembly garments, for example. Then you don't need to invest in R&D. You can grow manufacturing rapidly without that investment in technology. If you have our kind of industrial structure, the only way in which you can grow rapidly is if you invest a lot more in R&D. What am I talking about, invest a lot more? We invest as a country 0.3% of GDP in R&D, in-house R&D in our companies. The world invests 1.5%. In other words, we need to invest 5 times as much as companies. I'm not talking about the government, as companies in R&D to match the world level of R&D investment, to match also the Chinese level of R&D investment. China is at the world average of about 1.5, 1.6%. So if we really want to have a rapidly growing dynamic industry, I think we need to be much more technology focused and invest much more in R&D. The other side of that coin is trade and exports. We need to invest a lot more in international, and we need to be much more aggressive as companies in going international, and from a government policy and trade policy perspective, we need to reverse the protectionism that has crept in over these last 4 years. Because a tax on imports is a tax on exports. It's as simple as that. You have a garment company that's you'll import fabric free of duty because you're going to export the trousers or the shirt or whatever, or the dress that you've made. But what about the zips? What about the buttons? What about all the linings? What about all those smaller accessories? It's too much of a hassle to get all of that free of duty as well. And so you end up then paying a penalty. Uh, the same for steel and the engineering sector, right? When we have a tariff on steel, as we have in the country today, the entire engineering sector ends up being less competitive as a result, right? Why do we have a tariff on steel? Our steel industry is able to export to China today very successfully. Our steel industry is making record profits, at least in the last 2 years. Why do we need a tariff on steel? It should go. This is an opportunity to actually become more competitive as an economy by being much more outward looking in our trade policy, and that starts by reducing tariffs.
Okay, that's important, Mr. Santhanam. Do you share the concerns that Dr. Forbes has on this?
I have a slightly different take on that. I think while I think protectionism is in general bad, I think that globally unbridled open imports and other policies not supported by active anti-dumping has actually led to decline of manufacturing in many parts of the world, which the US or the Europe have suffered significantly, and wholesale industries have shifted. So, for instance, I'll give a thing. If we want to develop a solar industry in India, it'll take 5 to 10 years. It took 15 years for China to develop. During the period, China protected its markets. So, while the argument that we have to be extremely open is very relevant, but we have to be very sensitive to that. And the danger in that is, how do you do it? Who has got the knowledge and authority to be able to do that selectively? So I generally believe that, for instance, if we want to have a solar manufacturing sector in India, which is a vibrant possibility, we need to be able to support that industry with sensible tariffs for imports. Otherwise, I'm responsible for India and Asia Pacific. It makes much better sense for anyone to manufacturing it in Vietnam and completely sell it in India. So I think it is slightly more nuanced. And while there are some big sectors like steel and others where the protection has really had a downside on the other consuming manufacturing industries. So I think this is a more nuanced work, and I think more and more economists are viewing that free trade is not all that free. So therefore, I don't want to take this. Naushad is probably more knowledgeable on that. But when I look at it at a sectorial level, some quick support would be required. Today, for instance, there is so much asymmetry in our import-export. For instance, we have an FTA with ASEAN. The same goods which ASEAN is able to import, they have a tariff which is significantly higher than the tariff that India has imposed. So therefore, we have a lot of imperfections in what we are doing today. So we need to correct that. But I want to come back. So one of the things that we have seen in India, which is really in the manufacturing, I think Naushad alluded to it, is we have a challenge in terms of our cost factors. Our energy costs are high, and our single biggest cost is we are all moving heavily because of sustainability to natural gas. Now, natural gas is not under GST. And this is being talked about by Prime Minister, by Finance Minister, by Oil Minister. Everyone has talked about that. But no one is moving the needle because there is a big issue between center and state on this. So therefore, we need to fix this problem, because if we don't have the energy and the GST for industries, we really have a huge disadvantage today. So today, for instance, for me, it makes much more sense to make it in any one of the ASEAN countries and import that just because of the energy cost differential, because we don't have the GST and our energy costs are higher. So we have to fix some of these problems before we say that, the manufacturing has to. The third one is, despite all of that, probably because of all of this high input costs, we're extremely good in advanced products manufacturing and exporting. Most of what we export out of India in our group, 80% of it are advanced products, where we have solid margin, where India is a very solid base. Despite the factor cost disadvantages, we're able to do it because we have a huge skill and knowledge arbitrage that we do. So I think it's more nuanced, and we really have to look at that. I do agree that we moved a little bit towards a protectionistic regime now, but we need to be more nuanced about how to open it up. Yeah, so it's a complex subject.
We talked about energy, and one of the big concerns today, obviously, is when you look at Brent crude prices, Mr. Ranganathan, and the effect that's having back home already. We are seeing the direct impact on fuel prices here in the country, the petrol, diesel prices, but that obviously then has a cascading effect on the rest of the economy. In the short term, Mr. Ranganathan, what can we do about that? Because it's driving everything up, isn't it?
Yeah, I think crude price. One of the things is this is going and going up and up. I think the OPEC and kind of this thing. One of the things this pandemic has done is so many cartels across the world. I think that is really haunting. You name it, any of the commodities, the cartels are the order of the day, and that's what is pushing up the raw material prices across the globe. It's not just a one country phenomenon. So the crude is not an exception, and it will continue to go up. Kind of this thing. What can be done is the tariff can be brought down. I think that's one thing to reduce the burden on the economy. And government is, I think, this one way to offset various spending. Government is this one powerful source of money. But I think if there is something we can weigh the pros and cons and reduce the tariff, would definitely help and keep the impact of crude-related raw material price hikes would be much better. Is my recommendation.
Right. Now, there's a question from Himanshu Trivedi, who's one of our attendees, whoever would like to take this. He's asking about the agriculture sector, that we are already Atmanirbhar as far as agriculture is concerned, but there's still a lot of capital that is needed to pump into the sector in the form of subsidies in order to make it sustainable. So do we need a strategy to make it a business profession? Who would like to take that? The over-dependence on subsidies. Mr. Santhanam?
No, I would like others to take, because this is not a subject where I'm fully familiar with.
Okay. Yeah. Now, sir, will you take it or I will take
it? Okay. I mean, many countries around the world subsidize their agricultural sectors. That does not necessarily make it sensible, right? So we have a huge opportunity in India in more value-added goods. So if you look at actually the agricultural reforms that went through the new farm bills that went through in September, they're actually in the right direction. Now, the way that they were implemented, the way that they were passed, you can have lots of arguments about those.
Or the communication on them.
The communication, passing them on a Sunday, not allowing debate, all of that on a voice vote, show of hands, all of that stuff was wrong, right? But the laws themselves were sensible. They're the right thing for us to do to reform our agricultural markets, right? But it's a state subject. If you want agriculture to those laws to actually start showing up on the ground in a reasonable way, you need to deal with the states. So if you simply pass the law at the union level and then expect somehow that it'll get picked up and implemented sensibly at the state level, I think that's a big assumption that we're making. The same is true of the labor reforms that were passed in the same month. Again, labor is not a state subject, but it's a concurrent subject. It's both union and states. And for that to happen, again, you need the participation and cooperation of states. So again, engagement with the states makes a difference. And I think actually making those two sets of reforms happen in an effective way by dealing well with the states would be a very powerful, good thing to do for the country.
You mean cooperative federalism in the true spirit in which it was meant to happen?
Exactly. I think both sets of laws, especially the farm laws, were passed in much too high-handed a way. They were not passed in a way that they would get implemented effectively by the people who need to implement them, which is the state governments. I just wanted to add a comment to what Santhanam said earlier, just to agree with him. That if you're going to do, I agree that the import policy is more nuanced than I made out. I'm glad he made that point. And I think if you actually want to if you want to address tariff policy, you can do it in an effective way. So if you do bring in tariffs, as we have, for solar manufacturing, for example, or for deepening supply chains in all these production-linked incentive sectors, you need to combine it with one thing though. You need to combine it with a sell-by date. In other words, you need to say that, okay, tariffs of 25% now, which is what we've brought in for some of these goods, right? But next year it'll be 20, the year after 15, the year after that 10, the year after that 5, and in 5 years' time, the tariffs go away. So industry has a clear roadmap, and it's a credible roadmap in which that tariff goes away, and then you can be effective and competitive with world prices. So you're not imposing then a cost on the economy in the long run, but you create an incentive in the short run to invest in capacity.
Okay, we have one more question from an attendee before I take closing comments. Wasim, are you there? Please go ahead.
Good evening, everyone. My question is with respect to fiscal deficit, which is at 9.5% of GDP for 2021, and we have planned it to peg it down to 6.8% by next year. Firstly, how relevant is this target of 6.8% by 2022? And can if we establish financial discipline, does it help to get our economy back on track, or do we let it go on increasing for a little while so that the economy recovers?
Mr. Santhan, or who?
Yeah, I'll do that. So in this, I have a fairly straightforward position. I think the government is unduly conservative, and I think pegging it at 6.8 does not make sense anymore. I think given that this year we've already lost a quarter, possibly we would show a growth rate of 20% in this quarter, notwithstanding, because last year we went down by minus 25%. We may show 15% growth rate. So it's important for us to really move this fiscal deficit thing to about 8%. So our idea would be really do it now and do not wait for every single thing. I have a feeling our finance minister is unduly conservative on the fiscal deficit. This is the time. And we have seen that in almost all the advanced countries, we have seen this helping. So this is the time, and there is global growth rate now. So if we pump prime now, it'll make a very big difference. So we have to expand our the RBI balance sheet, all of that. This is the time to do it. If we keep waiting for everything to happen the right way, possibly we'll miss opportunities, because we already, as now shifted, we've lost 2 years.
Yeah.
These 2 years are not going to come back quickly. So I think this is the time to do it. And I think we have to get this fear of COVID out of our mind, be it in corporates, be it in the government, the fear of COVID. Okay, we're going to have the third wave. We will deal with it. I think today, probably you can ask, many of the corporates are ready with beds, with hospitals, with linkages. So the next wave comes, we are able to operate more uniformly. We'll have better protocols. We'll avoid the severe lockdowns, all of that. There is a lot of work that has gone in at a micro level. Take advantage of that. Don't wait forever on this fiscal deficit. I think it's not going to make a big difference if you go from 6.85 to 8.1 or 8.2. And this is the time to do it.
I cross my fingers that you're right about being prepared for the third wave, because having seen the national capital collapse the way that it did, among other places, that was, I think, scary, really scary and shameful that should have happened. So I hope that we are ready for the third wave.
The complacency was both the citizen and the corporates. Corporates, we were complacent. We had all the numbers coming in.
Well, the government to start with.
I know the government, but
take care of us.
Today, for instance, across the country, we have as a group about 200 beds available fully with oxygen for people, and we are just invested in that. I'm sure that many of them.
We don't need to use them, or you.
I hope so. I hope so. I hope we don't have to, but then we should be prepared. So, as Ranga said, we are able to live with COVID. I don't think
in the long term, probably yes. Yeah, once the vaccinations, as you said right at the beginning, that's the most important thing. So I'm going to end by asking all of you a question. I was laughing because today people were putting screenshots up on Twitter of news headlines on the economy dating back many years, and each headline said the same thing. The worst is over. The worst is over as far as the economy is concerned, and now good days are ahead of us. So please be honest as you can. I'll ask Mr. Ranganathan first. Is the worst really over, or are we in for some period of difficulty, even in the short term, before things start looking better?
I think the worst, the peak of worst is over, but there is some kind of difficulties in the short run is my viewpoint. I don't think we are going to hit one more second wave kind of a peak. That peak is over. We will definitely be better off as we go forward. The third wave is going to be small and short-lived, and so as the kind of thing. The vaccination, the only thing. I'm quite optimistic on the future of economy.
Dr. Naushad Forbes, the peak of the worst over.
I think the worst is over. I think we will see things get better from now. And I think exactly as everyone has said, our health outcomes will determine our economic outcomes in the short run. So, how we handle a third wave, how deep the lockdowns have to be as a result of that, depending on how we do with vaccinations, that will determine our short run outcomes in this year. But I worry about the longer term. The longer term, I think, requires a recovery in confidence, confidence among people to spend and companies to invest. That requires also then the right direction and the right moves coming, I think, out of the government. And with all of that, if we can get our confidence back, I think then we will see us getting back to the kind of growth that we had got used to and which we've moved away from in the last 3 years. So I think I worry not about the short run. We'll get back. I worry very much about the medium to long run because I think India deserves a growth rate of 9 to 10% year on year. We need a 9 to 10% growth rate. We have the potential to grow at 9 to 10% for the next 20 years if we do things right. And it's up to us to pick to do those things that are right.
Thank you very much to all of you, Dr. Forbes, Mr. Santhanam, Mr. Ranganathan, for joining us this evening. All of you have given a very constructive, sensible suggestions to whoever is hopefully listening out there to what can be done to revive the economy, to revive sentiment, giving us your analysis. And most importantly, as you've all, I think, agreed on, vaccination does hold the key. Quick vaccination of the population does hold the key to a strong revival. Thank you so much for joining us at the Kautilya School of Public Policy.
Thank you. Thank you very much. Thank you. Bye-bye.